Joining us now is the Hartford Financial Services Group Chairman and CEO, Christopher Swift. The company offers car, home, and business insurance along with employee benefits programs. Joins me now on set. Chris, it's great to have you back.
It's great to be here with you, Morgan.
Okay, 18+% year over year. It's still very high. It's very sticky, but that does signal a little bit of a deceleration in the pace of auto inflation that we've seen in recent months. Has it peaked?
I do believe it's peaked, and it will begin to moderate slowly into 2025, but still remain higher than maybe consumers expect or like, principally because our cost of goods sold is still elevated compared to historical norms. And we could talk about it. I could give you three reasons why they're still inflated, and it's broad-based inflation. And we break down sort of the inflation components in our analysis into frequency components, into severity, both bodily injury and property damage. There's an element of social inflation or legal system abuse. And then finally, there's a weather component of just more severe convective storms that affect both auto and the home line. But if I go into the details just a little bit more, severity, for property damage is elevated, principally because used car prices are high, labor components are high, the replacement components with all the electronic gadgets that are in cars these days is high, and it just adds up. Particularly given then there's delays in getting cars fixed with various repair shops across the country.
Okay. On
the bodily injury side, it's just more expensive to settle claims, whether it be medical trends that are affecting, getting people back to health, whether it be lawyers being involved earlier on in cases and demanding higher settlements. The average cost of claim settlements is up about 30% over the last 4 or 5 years.
Wow. Is there a point at which, and we've seen it particularly elevated on the auto side, but it's happened on the homeowners insurance side as well. Is there ever a point where we get back to deflation or deflationary environment for consumers? No. Sounds like no.
I was going to, try to be optimistic, but again, component cost on homes, commodities, labor are still elevated. What happens when there's larger catastrophes in an area? There tends to be surge pricing where demand goes through the roof. That affects things, but the changing weather patterns and the frequency of more severe convective storms, primarily in the middle of the country, even outside of hurricanes or earthquakes, wildfire is still elevated in the western parts of the country. So the frequency of large losses is high, and I expect it's going to remain elevated at least for the next couple of years.
Okay. And of course, we did just get our third named hurricane storm or system of the season as well today. You have a robust employee benefits business as well. At a time where labor market dynamics are very much in focus, what are you seeing from your vantage point?
I would say, steady as she goes. There's been pockets of retreating of labor, meaning layoff, primarily, I would say, in the tech sector. But generally, from East Coast to West Coast, north to south, it's been steady. The change for us is in the prior 2 years, it was actually more robust. So there's much more employees being added. Wages were up, which then affects our premium increases. So I would say we're getting back to normal with premium increases and growing our business in that 2 to 4% range.
And we mentioned the fact that insurer stocks in general were trading higher today. Allstate, perhaps one of the reasons is because they're selling one of their employer benefits related businesses as well. How are you thinking about your portfolio?
Yeah, we love our portfolio. We like to describe it as a diverse but yet complementary mix of businesses. If you really think about it, it's all underwriting-based businesses, P&C and benefits. They go together. They go together with our claims function, customer experience. We're all aligned on it. So I like our business mix quite a bit. And our stock price has been up 35+% this year. So I think investors like it, too.